Did you know that only 3 companies control $25 trillion in assets? That's more than the entire US economy, and right now they are buying the exact same positions I've been accumulating. Here's the fact that should terrify you. There's a system tracking every single transaction worldwide in real time. It sees where money is going before it even moves. It's called Aladdin, and it belongs to Blackrock, a company most people have never ever heard of, yet it quietly controls the financial world. I've learned how to follow its trail, and that's exactly how my portfolio now outperforms the S&P 500 with a 48% internal rate of return. In the next 30 minutes, I'll show you how to use the exact same system to profit. Welcome to Psycho Investor, where we exploit the system that exploits you. And if you think you live in a free market, you're about to have your reality shattered. Let me start with the story of Larry Fink, the man behind Blackrock. In 1986, he lost $100 million and got fired from First Boston. In today's money, that's several billion dollars, enough to end most careers forever. But instead of quitting, Fink became obsessed with one thing that would change the financial world forever: risk management. 2 years later, in 1988, he created Blackrock under Blackstone's umbrella, and today that company manages $12.5 trillion. That's more than half of the US GDP and more than 3 times Europe's annual GDP. But the size isn't even the scary part. What nobody talks about is how they own 3 to 10% of every Fortune 500 company. Take Apple, where they own 7%, Microsoft, where they own 9%, or Amazon, where BlackRock, Vanguard, and State Street combined own 16%, while Jeff Bezos himself only owns 9% of his own company. Today I'm revealing how these big three create fake competition while controlling all sides, why they literally cannot sell, and how we exploit this, plus the Aladdin system that sees everything and how to read its patterns. Most importantly, I'll show you my exact strategy for riding their coattails to 25% returns. And yes, I'll reveal why BlackRock just became the second largest shareholder in my broker and why that validates everything I've been doing for the past 3 years. The story of BlackRock starts with failure, specifically that $100 million loss in 1986 that got Larry Fink fired from Boston. Most people would have been destroyed by losing that much money, but Fink saw something different. He thinked. He realized the entire financial system was flying blind without proper risk management, and that realization would become his empire's foundation. By 1988, Fink had convinced Blackstone to let him start a small risk management company called Blackrock. But the real genius wasn't just managing risk, it was building a system that could see risk before it materialized. That system was called Aladdin, which stands for Assets, Liability, Debt, and Derivative Investment Network. Now, Aladdin isn't just some software program. According to the facts, it's a global system that tracks millions of transactions in real time, evaluating risk and forecasting market futures. Many banks, pension funds, and even governments use this system because it does something no other system can do. It sees everything. They call it the all-seeing eye of finance because it knows how money moves, what's happening in markets, and where risk accumulates before anyone else. If the world had one financial supercomputer overseeing everything, it would be Aladdin. Critics say whoever controls Aladdin controls the financial world, and that controller is Larry Fink through BlackRock. Which brings us to the moment that changed everything. In 2008, while the world's financial system was collapsing, something interesting happened. The US government realized they had trillions in toxic assets that nobody understood. Those mortgage-backed securities that had been packaged and repackaged so many times that their value was unknowable. Banks were failing, markets were crashing, and nobody knew which assets were worthless and which still had value. So entered BlackRock and their Aladdin system. The government hired them to untangle this mess, to sort through the toxic waste and figure out what was actually worth saving. While everyone else was panicking, BlackRock was methodically analyzing, categorizing, and valuing assets that others couldn't even understand. They became the government's cleanup crew, and the payment wasn't just in fees. The real payment came in 2009, when BlackRock made history's biggest acquisition. They bought Barclays Global Investors for $13.5 billion, including iShares, the ETF leader. This single move transformed them from a large asset management into the undisputed #1 in global asset management. They had used a crisis to become bigger than anyone imagined possible, but becoming the biggest was just the beginning. What happened next is where the story gets truly insane. As BlackRock grew, they started buying shares in every major company, not to trade them, but to hold them forever. And this is where the ownership web that controls everything begins to reveal itself. Pull up any major company today and you'll see the same pattern. Let's start with Amazon. Jeff Bezos, the founder, owns 9% of his own company. That seems like a lot until you realize that BlackRock, Vanguard, and State Street combined own 16%. They own more of Amazon than the man who created it. The same pattern appears everywhere. Apple, where the big three own 20%. Microsoft, where they own over 20%. Google, Tesla, Nvidia, every major company has the same three names as the largest shareholders. But then I discovered something that made my head spin. Who owns BlackRock? When you look at BlackRock's largest shareholders, you find Vanguard with 13%, BlackRock itself with 7%, and State Street with almost 4%. Then you check State Street, and who do you find? Vanguard owns 13%, BlackRock and State Street itself own another 12% combined. The trio owns 25% of State Street, and Vanguard, the same pattern emerges. They own each other in a closed loop of power that controls $25 trillion. It's like three people passing the same money between themselves while everyone else watches and thinks there's competition. This circular ownership structure explains something important. When the same three companies own competing businesses, competition becomes theater. They own all major US airlines, including American, Delta, United, and Southwest. When these airlines raise prices together, they are not colluding in the traditional sense. They are just serving the same masters. The same happens with banks. JP Morgan, Bank of America, Wells Fargo all have the same owners. In technology, Apple versus Microsoft versus Google looks like competition, but it's the same owners fighting themselves. The result is that prices rise together, wages stay suppressed, and innovation only happens where it benefits the owners. The market always goes up because they can't let it fail when they own everything. BlackRock calls themselves passive investors, which sounds harmless enough. They claim they just buy index funds and hold them, following the market rather than trying to beat it. But this passivity is actually their greatest weapon, and understanding why changed how I invest forever. Think about what happens when you manage $12.5 trillion. You can't just sell when you want to. Warren Buffett, who is considered one of the most powerful investors alive, takes 6 months to sell half his Apple position just to avoid crashing the market. And he owns much less than BlackRock does. If BlackRock tried to dump even 5% of their Apple position, the stock would crater 30% instantly. They are not just invested in these companies, they are trapped in them. But here's where it gets brilliant. They turn this trap into the ultimate power play. Since they can't sell, companies know BlackRock will be there forever, which gives BlackRock incredible influence. And the way they gain this influence is through one of the greatest scams in financial history, the voting rights transfer. When your pension fund buys an ETF, something interesting happens. You lose your voting rights in those companies. Those rights don't disappear. They transfer to whoever manages the ETF, which is BlackRock. When millions of pension funds, 401ks, and insurance companies buy BlackRock's ETFs, they are not just giving BlackRock their money, they are giving them their voice. This means BlackRock now votes on everything that matters in corporate America: board appointments, executive compensation, company strategy, mergers and acquisitions, all decided by votes that BlackRock controls with other people's money. With just 3 to 10% ownership, they are often the largest single voter in any decision. A 2017 study found something revealing. Asset managers almost always vote with companies' management recommendation. They support management 90% of the time, which seems strange until you realize they've already influenced who management is through previous votes. Academic studies show that 5% ownership is considered the threshold for control, and the big three together often hold 25% of shares in individual companies. But voting is just the public face of their influence. BlackRock performs hundreds of private engagements with companies, over 100 in just 1 year according to their own reports. They believe that meetings behind closed doors can go further than votes against management, so they typically give management a year to implement their suggestions before voting against them. It's soft power that looks like passive investing. This universal ownership, as economists call it, has real consequences. Studies show it contributes to less competition and higher prices across entire industries. When every company in a sector has the same owners, why would they compete aggressively? It's like running a race where the same person owns every horse. The ESG controversy perfectly illustrates their game. Right-wingers attack BlackRock for being too woke, pushing environmental and social justice agendas. Left-wingers attack them for destroying the planet by investing in fossil fuels. Both sides are right, and both sides are being played. BlackRock invests in oil companies and renewable energy simultaneously. They push ESG rules that happens to benefit their holdings while claiming moral high ground. They profit from the division while controlling both sides of the debate. Understanding this changed everything for me. Since they can sell, their accumulation patterns becomes predictable. When BlackRock starts buying something, they're committing for years, maybe decades. This creates an opportunity for anyone paying attention. I have my own system to track their footprint. Large block trades after hours, unusual options activity, multiple days of identical purchase sizes. These are the fingerprints of institutional accumulation. When you see institutional ownership rising from under 5% to 7%, when daily volume increases without price movement, when options skew changes, you are watching them build a positions they'll hold forever. The key insight is that when BlackRock decides to add significant weight to position, it takes 6 to 12 months because they have to buy slowly to avoid moving the market. That's our window. The time between when they start accumulating and when the market realizes what's happening. A real example from my portfolio. Freedom Holding Corporation, the parent company of Freedom24 broker. Looking at the chart in May 2024, the stock was at $69.18 when institutional ownership started accelerating. You can see on this chart. Then something changed in Q2 2024. The accumulation pattern started to show up. By Q1 2025, institutional holdings exploded to over 1.3 million shares, finishing with that massive green dildo showing a 75% increase in just last quarter. The stock price followed, rising from $69 to $161.89 as institutions poured in. BlackRock alone increased holdings by 579% to become a major shareholder. They are trapped in this position now. They can't sell without destroying the stock price, which means they are committed for years. When they buy, I know it's not speculation. It's a multi-year commitment I can follow. The European arbitrage opportunity makes this even more interesting. US markets have 70% institutional ownership, already dominated by big three. European markets have 25 or 40%, while Eastern European markets have less than 20%. The big three are just starting to colonize European markets, which means we have maybe a 5-year window before they own everything here too. Now that you understand how the system works, let me show you exactly how I build a portfolio that generates ridiculous returns by following one simple principle. Whatever BlackRock touches turns to gold, so I follow their every move. Look at my actual portfolio and focus on the internal rate of return. My portfolio IRR is almost 48%. That means, accounting for the timing of all my investment and cash flows, I'm generating a 48% annual return. How? When BlackRock launched Bitcoin ETFs, what did I do? I bought every Bitcoin ETF available. Beta with a 62.84% internal rate of return. That's not a typo. A Bitcoin ETF paying massive dividends while appreciating. IBIT showing 37.2% ERR, even though it's slightly down. When Blackrock commits to Bitcoin, I commit to Bitcoin too. BlackRock owns all the major tech companies through their index funds. So what's my play? Leveraged ETFs that multiply their returns. TQQQ, the 3 times Nasdaq ETF, showing 52.42% ERR. When BlackRock's tech holdings go up 1%, mine go 3%. It's pure mathematics. Here's my another income machine. BlackRock is one of the largest shareholders of JP Morgan. JP Morgan runs some of the best trading desks in the world. So I own JPQ. JP Morgan's Nasdaq Equity Premium Income ETF. Only 12.8% ERR, but it pays me monthly income while I sleep. BlackRock owns the bank. The bank creates the product, I collect the cash flow. Main Street Capital at 36% ERR, up 42.83%. Why do I own it? Because when BlackRock controls the entire financial system, companies that lend to the middle market businesses literally cannot fail. Even my small performer tells the story. Freedom Holding, slightly down at negative 0.37% ERR. I bought $810 worth of when I discovered BlackRock was accumulating. It's basically flat right now at $809, but remember what I showed you earlier? BlackRock just increased their position by 579%. When they move that aggressively, short-term price action is irrelevant. I will accumulate more. Even my speculative plays follow the pattern. MicroStrategy, down 13.97% ERR temporarily. But they hold more Bitcoin than almost any public company, almost the same amount as BlackRock itself. So when BlackRock's Bitcoin ETF explodes, MicroStrategy follows. The psychology here is crucial. Most people try to outsmart the market. I just follow the titans who own the market. The psychology here is crucial. Most people try to outsmart the market. I just follow the titans who own the market. My portfolio's 48% internal rate of return isn't from genius stock picking. It's from following the $12.5 trillion elephant in the room. 3 simple rules create this 48% ERR portfolio. If BlackRock launches it, buy it. If BlackRock owns it, leverage it. If BlackRock controls it, milk it for income. While everyone else is reading charts and following gurus, I'm following the company that owns your pension fund, your insurance company, and probably your employer. Okay, I've just shown you how 3 companies control the world's wealth through a system so complex that most people don't even know it exists. You have 2 choices now. You can complain about it and stay poor, or you can profit from it and build wealth. I started public portfolio from zero in June 2022. Today, just over 3 years later, I have $126,000 with a portfolio ERR of 48%. I've already collected over $47,000 in dividends, and in the past 12 months, my portfolio has outperformed the S&P 500 by over $6,000, generating a total growth of almost $30,000 over the year. That didn't happen because I'm smarter than you. It happened because I stopped fighting the system and started exploiting it. Your action steps are simple but require commitment. First, open a real brokerage account. Yes, I recommend Freedom24, the one BlackRock just increased their stake by 579%. And yes, the link is below. Second, start tracking institutional ownership because it's all public information waiting to be used. Look for those 13F fillings showing when BlackRock, Vanguard, and State Street start accumulating. Third, stop thinking like a victim. The system is rigged, so learn rigging and use it. Fourth, subscribe to this channel because I publish content that will help you to become rich. While you've been watching this video, BlackRock's Aladdin system has processed millions of trades. The big 3 have accumulated millions more in assets. The machine never stops, never sleeps, never hesitates. The question isn't whether the game is rigged anymore. The question is whether you are getting to play it smart or get played by it. They called me psycho for buying Bitcoin ETFs when BlackRock launched them. Now beta shows 62.84% ERR. They laughed when I loaded up on leveraged ETFs, tracking BlackRock's holding. TQQQ is showing 52% ERR. They said I was crazy buying small Eastern European broker. Freedom Holding just saw BlackRock increase their position by almost 600%, and State Street by almost 300%. Who is crazy now? The person following the $1 trillion smart money with a 48% portfolio IRR, or the person fighting against it chasing your grandfather's stocks? If you found this video informative and valuable, subscribe to the channel, hit the notification bell, join me in exploiting this rigged system, and remember, in a rigged game, the only winning move is to play by the rigger's rules. This is Psycho Investor. Stay psycho and stay profitable.